The settlement that we were expecting from Bank of America has just been announced, $8.5 billion, as we reported to you last hour. That was on the basis of people familiar. We're getting the announcement straight from Bank of America this morning. $8.5 billion. It is a settlement with 22 investors who claimed that they were duped into buying securities containing bad mortgages. Those securities, mortgage-backed securities, were sold by Countrywide Financial, acquired by Bank of America back in 2008. This dispute has been simmering for about 9 months. The investors included PIMCO, BlackRock, even the New York Fed. They bought these so-called private label mortgage-backed securities that contained loans that they argued had been misrepresented by Countrywide Financial, that the quality of the loans or the quality of the borrowers wasn't nearly as good as Countrywide had maintained. That's why they were fighting with BofA. BofA's CEO, Brian Moynihan, said that he was going to engage in hand-to-hand combat. That was several months ago. What's happened since then? BofA stock has been going nowhere but down. Investors clearly want the bank to put the mortgage issue behind it. That's why BofA has agreed to this $8.5 billion settlement, and it's also saying that it will provide an additional $5.5 billion in the second quarter of 2011 for more of what are called representations and warranties exposure. That's the stuff at issue here. Let's get to our own Dominic Chu. Dom, you've been following the story as closely as I have. What more can you tell us at this point?
Well, that's right, Eric. And that $8.5 billion, like you said, is the real headline number here, the real big number there. And just to put that in perspective, Eric, that represents all of Bank of America's profits in 2009 and half of their profits in 2008. So, again, 1.5 years worth of profits wiped out by this particular settlement here. One of the biggest that we've seen so far. In fact, the biggest to date in this whole kind of mortgage rep warranty scenario that you were just talking about. Also interesting right now, in addition to all of that you just talked about there, Bank of America also pre-releasing, if you will, some guidance, so to speak, for their next quarters of earnings right now. I want to take you through a couple of the numbers here. What they're saying, second quarter adjusted earnings per share could be 28 to 33 cents. Now, that tops the 28-cent analyst estimate out there right now. Second quarter loss per share of 88 to 93 cents in terms of overall aggregate losses here. We're also seeing some impairment charges, $2.6 billion in impairment charges for the second quarter. So, again, a lot of headlines, Eric, Deirdre, are starting to kind of flow through now. Bank of America giving the market some indication. And, of course, check out the stock right now in the pre-market. It is higher, surging here in pre-market as investors, like you said, get a little more clarity on what happens with their legal picture going forward.